In the last Nifty analysis video, we had said that market can fall, and this was a snapshot shared. And there was no sign of selling at that moment. But if you see, the market has actually formed a similar sort of pattern. And this is how wave analysis can help you. So normally we expected a corrective structure, and corrective structure is minimum 3 waves. So if you consider this wave, let me draw the trend line. So if you consider this wave as the first A wave, now probably B wave is going on. And this structure will get complete once we have the break of this structure to form the C wave. So probably B wave also internally is divided into 3 subwaves, 3 or more subwaves. In this case, you can see this is the first wave of B, this is second wave, and probably we are getting the third wave. So if we get any upside and then a selling setup, then one more fall can come to break this point. At this point, we need to observe the price action here and check the divergence on chart. Once we get this fall, after this upside, then if we connect this trend line here, then we need to observe whether this correction is over or not. And probably after this, we can get the next up move that will break this top again. Because in overall, if you see the hourly chart, uh, so right now, this was the first wave to the upside. This followed by corrective structure, then again one fast up move, and this is probably the next correction. And then we are expecting one fast move to break this top. And internally, you can see as of now there was no divergence, so we always expect one up move to the top, and then a divergence will start to appear, and then we will get a bigger correction in this chart. And important point to observe is that if you compare this correction and this correction, as of now they look equal. So this can be in the same degree. However, if suppose for some reason if this continues to correct more and forms a bigger correction than this, then degree of this correction will change. It means that then this impulse will be over, and this will be a second structure. As of now, this correction is part of this impulse because this and this correction are equal in length. But if this correction increases, then this will be a separate wave than this wave. I hope this point is clear. So we will review this point in future, but as of now the expectation is that once this correction is over, we will get the next up move to the upside. And suppose for some reason if this correction extends, then this wave is over. So after this bigger correction is over, we will again expect up move, but that will take more time as this will be a bigger correction then. So these are the two possibilities in this structure. Now let us try to find what happened today. So let us go to the intraday chart. Let us switch to the 15-minute again. So yesterday market had finished here, and today we got the first up move, but immediately price reverse. Now if you follow closely, there was also a breakout here, and many traders may have hit their stop loss trading this. The reason is that if you follow clearly, this can be part of this corrective structure to complete the correction, and then probably this is part of correction to for one more fall. So there is always doubt when the stock is in a correction. So we have to check properly whether this wave retraced 100% of this wave, this was not an impulsive wave. And that's why it's not always we should wait after the impulsive move. We should always wait for proper correction that does not retrace 100% of this wave. I hope this point is also clear. Now let us review Bank Nifty. And Bank Nifty is actually forming a different structure. Now let us try to find that on the Bank Nifty chart. So if you see Bank Nifty, let us go to the 15-minute chart. So there was a fast move down here, but this quickly went up. So this can be all part of the correction, and that's why you can see there was one more fall to complete this correction. So after this correction, at least an up move that should break this top was there, and we already got this up move. Now you can see this was the wave that went above this top. So all this is expected. At for this impulse, we got the corrective structure, and then one more push to the top. And this, if this is the case, then we are again getting a corrective structure, so it can again clear this top. And if this is not whatever this understanding is, if this is different than that, so let us understand what are the other cases possible. So if you so if you see this is a fast move to the downside, as of now this looks like an impulsive structure. But if this is a fast move and this is just a corrective structure for this, which means after this correction is over, we will again get one more push down. So this is how you have to you have to know all the possibilities that are possible and what sort of structure can happen in that case. You can see this was a fast move followed by a correction, and then this became the corrective structure in this case. So at this moment, you are waiting for fall that will go below this top, and that has also done. So this is how, on a smaller time interval also, you can predict what sort of move can. So basically, what you have to do is to form an impulse. You have to find an impulse, and after this, you have to identify what is the corrective structure that is formed. So if you have identified impulse and corrective structure properly, then you can always trade this impulse. And for this, the stop loss should be at the top, because the wave correction should not go to the 100% of if this is an impulse. I hope this point is clear, and if this delivers value, please consider subscribing and sharing with friends. And if you have any doubts, please post them as comments.